Yeah, I mean, I think taking a cue from Vladimir Lenin, there's decades where nothing happens, and then there's weeks where decades happen. You look at a long-term chart of Tesla, like it's at record highs right now. It's the best performing stock in the Russell 3000 since its IPO. But if you look at a chart, there's 2 6-month windows where the vast majority of its gains have come. In the chart you're seeing there, it was in mid-2013 and the last 6 months. The stock's at just under $1,400 a share. If you didn't have those 2 6-month periods and all else equal, the stock would be under $90 a share right now. So I think the lesson from a stock like Tesla is, while it looks in hindsight like it was an easy ride, there was a lot of period where investors had the opportunity to doubt themselves, and they were really rewarded for hanging on to the stock. So I think it's just an overall investment lesson for investors to focus on, not to get too antsy when you have a position that's not doing a lot, because the bulk of most stocks moves happen in a short period of time.
Well, we are in the middle of one of those spurts for Tesla, up 1.4%, Mike Santoli. What is that in 5 days, up more than 40%? What's causing it? What is it a symptom of right now in this market?
First of all, up 1.4% for Tesla lately means it's like a down day. So you did have another call out there that it could get to 2,000. What is it about? I mean, it's a combination of pure momentum, but also just the benefit of having this complete big picture thinking, almost unlimited theoretical growth story that captivates people. You've obliterated the short base to a fair degree. It's the short as a percent of the float is down to about 10%. It used to be up around 30%. Right now, with a market value of $260 billion, I don't really know what you have to assume goes right for many, many years to actually have this be a fair valuation. It's very difficult. Back in 2016, the bull case on Tesla was, hey, guess what? They're not going to have to wait till 2020 to get 500,000 units. They're going to do it in 2018. They didn't do it in 2018. Right now, they hope to get that 500,000 in 2020. And that was back when the stock was at 200, and now it's at 1,300. So I can't tell you what is getting baked into this stock right now, except that all the clean energy stuff that doesn't rely on current earnings is moving like this.
Shorts.
Let's move on to shares of Walmart, which are also higher today. Getting a boost off this report, the retailer is launching an Amazon Prime competitor that's coming later this month. It's all according to Recode. Walmart Plus is what it's going to be called. It's a new subscription service costing $98 a year and will include same-day grocery delivery, discounts on fuel at Walmart gas stations, and early access to product deals. Sounds a lot like Amazon Prime. Paul, are investors right to be excited about it?
Well, I think there's two online retailers pretty much right now. Walmart is moving more and more equal to Amazon in the case of retail, but Amazon's a lot bigger and a lot more tentacles in a lot more places. And it's just as far as the value of their prime competitor, I wouldn't, suggest that it's, are you getting as much value for your money there? But I mean, I think in this environment that we're in, Walmart has really made the transition to online grocery shopping and online shopping much, pretty smoothly, and that's benefiting the stock here.